Good evening, everyone. This is Henry Gamble with SimplerOptions.com, and in tonight's free video I'd like to discuss two setups that I'm going to be following with you for the next couple of weeks. The past two sessions of this week have brought a lot of volatility to the markets, but there's a couple of things that I like to think about inside this, and of course by volatility, and this will be good for archival purposes if you're watching this a couple of years from now, whatever it may be. But what I'm looking at is you've got the S&Ps that have sold off pretty hard. You have the spiders that have come right down into their 200-day moving average and started to find a bounce from there. But the point to make here is that the overall market has taken a very serious hit. Well, inside that, when something like that happens, I like to go in, and if I'm looking for bullish positions, look for things that are bucking that trend and that really don't care that the markets have had such a substantial sell-off. One of those that I'm currently looking at is Restoration Hardware. Now, it's not to say that this market hasn't had down days. Today it was down a little bit at its peak, a little bit better than 1.5%, but it did nothing other than pull back into this zone between the 13 and 21 EMA. So I like the way it's holding up inside of that. Still a very nice pattern of higher highs and higher lows. We have a daily squeeze in play, and then we also have a weekly squeeze in play. These are all various things that I like about this chart, and the fact that you came up here and made this new high, pulled back a bit, and now we have a chance to push up on through it. So inside of that, how might you look to play this? Well, I think that these types of situations make sense to look at two expirations, and then you can choose how you like to play it. If you are a little bit more of a short-term trader and you're comfortable with somewhat thin spreads and working around that, I think working this in July is perfectly fine. You've got a situation where you're trading 97.85. The expected move over the course of the next 10 days is right there about $4 or so. And the way that I would look to play this is by buying a butterfly. Now what I like to do with these is if I can get them for 1/3 the cost of the spread, which would put me down a little bit closer, near around $1.30 or so. So it's a little pricey right now, but I like these ideas because if it can move up into that psychological 100 level and chop around there for the July expiration, that's where your butterflies will really come in for you. Now, if you'd prefer to play it a little bit more directionally, I would step out and give yourself a little bit more time going into the August contracts. Whenever you're trying to decide where you want to place your butterflies, and in this case I think a straight up call vertical would be perfectly fine too, since the spreads are a little thin, but I just like to use these previous swing highs against our swing low, and that extension will give you a good place to focus on placing your other contract. In a perfect world, the resistance would have come in at 104.99. Now why do I say 104.99? Well then, because if you've got something like this butterfly around 105, you want to see it stay just below your short strike while maximizing your long strike. So it's not perfect in relation to those extensions, but it's not bad. And then if you just wanted to keep it simple, or maybe keep your commission costs down a little bit, because of course the butterflies do have additional legs, something like this would be a fine way to play that into August. So that's a position that I'll be looking at to play to the buy side over the course of the next couple of weeks. And then if you prefer to focus on short setups, this is one that I'm going to be looking at here in CMI. So for this, essentially, I'm bearish energy as a whole, and this is a ticker where when you look at the weekly chart, you can see a weekly squeeze that is fired short. You've got the recent lows kind of in sight. It's just an area where I think the easiest trade is going to be when we come back up into this 135 area to look at selling call spreads. Now, you might look at that 135 area and say, well, that's easy because you're using the voodoo lines and it's obvious. What if I don't have those? Well, come back and hide your studies. And another one of my favorite ways to analyze charts is just using clean, basic price action. And what I'm looking for is the rally that preceded the decline and then projecting that from the low. So in this case, you can see we had a little bit of a rally here from the beginning of April. This last run higher into the first bit of May is what I want to see. I project that from these lows, and then notice how closely this lines up with that voodoo line. So when you find confluences like that, and if you're using this indicator, well then that helps back the idea that that resistance will hold. If you're not using that other set of indicators, that basic price can be very helpful and will give you an area to sell against. I like that 134 area because of course you have a 135 call that could be sold and you're right at that strike, so you could get some good premium. I also like the idea that overall this 135 zone will be resistance when we come back up to test it. and this is something that I would like to sell while the underlying is being bid, and then look for it to roll back over. So the Restoration Hardware one I think is in play a little bit quicker. CMI, let it come up to resistance and kind of try to sell that on strength, and then those are two of the main things that I'll be watching here in the weeks to come.